Welcome to Financial Services. In this module, we will be discussing reinventing financial services. It's of critical importance for us to understand the role of the financial services sector as it relates to the main big picture. In everyday life, that we interact on a social basis. Everything that we do, whether we go to the supermarket, whether we pay our utility bills, whether we go to the market, whether we pay for goods and services, we all use some form or structure of the financial services sector, whether formally or informally. So in this module, we will be discussing the important components as it relates to the broader picture, introduction to blockchain, and tie in introduction to blockchain, the proponents of what we would have discussed so far, and how we can really understand the dynamics of why there is a greater need for reinventing the financial services sector. But before we do this, I want to make a disclaimer. The information that's presented here in today's module, in this module, is for education purposes and does not constitute financial or legal advice of any kind. Just wanted to share that disclaimer that what we are discussing here falls within the purview of our educational modules, and it is not for financial or legal advice. So with that out of the way, let's discuss the main attributes of what dictates our daily lives. And what is it that really dictates our daily lives? Money. Money is the impetus for us getting up in the morning, going to a job sometimes that we may not particularly like, or doing things that we may not particularly like, because money is the driving economic force of society. So what begs the reason, or the question rather, what is money? Have you ever thought about money? Most people have not really thought about money unless you would have made a clearer research, or you would have delved deeper into what money really is. So what is money? What are the proponents of money? How does money articulate itself in our society? What are the complexities governing this whole thing that we call money? Well, money has three main functions. And the three main functions money represents, it acts as a medium of exchange, meaning a dollar in my pocket is the same as a dollar in anyone's pocket in TT dollars. If you're in Barbados, a dollar in one person's pocket is the same as some other Bajan wherever they are, and likewise any particular country that we may be discussing. So a medium of exchange is very important for one of the main roles of money. It acts also as a unit of account, meaning that we can validate purchases by the use of the unit of account. We can take our medium of exchange and articulate that to a particular value for a good or a service or services. But more importantly, the main function that really money should act as, by definition, should be a store of value. Unfortunately, what we have in our pockets isn't really by definition money, because money is by definition anything that holds purchasing power or value over time. But if you understand how currency works, which is the fiat money system, which is issued by a country's central bank, we begin to recognize that there aren't any evidence anymore to substantiate increase in purchasing power. In fact, there are more losses in purchasing power these days. But when we look at the evolution of money for illustrative purposes, we begin to understand that the whole history of money started as a social construct. It started as a society interacting with each other to represent value. And that's where it started, bartering. My 3 loaves of bread for maybe one fish, or maybe one cow for maybe half an acre of crop. That was the bartering system that existed thousands of years ago. Now, there are advantages to the bartering system, but in many cases, there were disadvantages because the persons that were initiating the transactions did not always agree on value. So it evolved over time where we began using gold. And if you would have listened to anything from Mike Maloney, which I would advise you to, it's not an advertisement, but look at Mike Maloney, The Hidden Secrets of Money, and you'll begin to really truly understand how deep the rabbit hole goes. And then we evolved from gold to metal coins to paper, plastic cards, as early back into the early 1940s, where the Diners Club card was the first credit card that was actually created in order to facilitate digital transactions. And that evolved over time to what we have as electronic money, online banking. Many of us do online banking, so we are already interfacing with electronic money. And of course, the new kid on the block that's creating quite a lot of stir and disruption since 2008 into 2009, Bitcoin, cryptocurrency, a new peer-to-peer digital currency that uses cryptography. And this is the original timeline in the evolution of money. But when you really look at the evolution, what sparked the evolution of money to begin with? What creates the need for one particular society to evolve into another method? And that has a lot to do with disruptions. It has a lot to do with when one particular mode of doing business no longer is practical or applicable. And we're seeing it play out today in the world with the advent now 2008 with blockchain, and how blockchain has now opened up the dynamics of cryptocurrency, which is changing the dynamics of the financial world. And they're playing catch up. They're going to have a lot of disruptions that are taking place. And many persons and systems that are in power base levels do not understand the dynamics and are in fact resisting. So when we look at the whole dynamics, that it took roughly 500 years, believe it or not, for people to accept paper as a representation of value versus gold coins, we begin to understand that anything that represents a major disruption or even creating value because of the need for disruption is in fact going to be violently opposed. The United States dollar is the current world reserve currency since the Second World War. And for the last 5, 6 decades has held its ground as the reserve currency, meaning other currencies peg their value to the United States dollar. We are seeing massive amount of printing by the United States government for the last couple of decades, but in more so since 2019 into 2020, the adverse dynamism of a superpower printing money into oblivion. And the problem that Robert Kiyosaki would have identified many years ago in his book, Rich Dad, Poor Dad, or Conspiracy of Money, says that every time governments print money, they are in fact creating a problem with purchasing power, so that savers are in fact losers. So saving money long term, meaning currency in a bank long term, does not truly represent any major value simply because of a centralized authority. And when you have centralized authorities that holds steadfast to what they personally want to believe, meaning in this case, they are believing that the money that they're holding on to, the United States dollar, is going to continue to have value. The Federal Reserve System is a perfect example of that. So savers are in fact losers. So we are seeing the effects of a system that has become antiquated, that no longer serves the need and never did to begin with the real needs and value of the population. And that's where disruption is taking place. So if we look at the rise and fall of the US dollar from since 1913, well over 100 years in existence now, and we look at the US recession periods, we look at since Bretton Woods was conceptualized back in 1943 after the Second World War, and we look at the many decades that ensued from there, one begins to realize that the purchasing power of the United States dollar is practically zero. Because when you continue to print money that does not have value, or there aren't enough economic activity to substantiate the printing of fiat or currency, then we end up in a scenario where Washington, since April of 2021, has a public debt of 28.17 trillion. Yes, trillion with a capital T. That's over $3.2 trillion from the last year of 2020. So when you continue to print fiat and there aren't economic activity to truly substantiate this, purchasing power is affected. Therefore, goods and services are going to be affected. Therefore, you'll be paying more for less. And then there's even stagflation and deflation are some of the risks now that economists are battling with. Because when you try to manipulate interest rates in order to keep down purchasing power, then it is like an explosion, it's like an atomic bomb that tends to occur, and we create all these nightmares as it relates to money management. So this is the reality of a current financial economic system that obviously is not working anymore. It has not worked for a majority of the world. It has worked for the United States because they are the reserve superpower currency and everyone uses it. But the world is waking up. They're recognizing there's something is fundamentally wrong. And when you have centralized systems, all central banks of the world that control printing of their own currency, the monetary supply, M1, M2, M3, as the case may be, you begin to recognize that there are unique complications that arise. So when we look at blockchain and the advent of what blockchain really represents, we are in fact talking about the use of a system that does not particularly give credence to one particular idea or realization. And history is filled with many examples of fiduciary in nature from kings and queens. And that's how banks started to begin with, to take away that power from kings and queens, because they had full authority to do every and anything over its peasantry. And that created a lot of problems. History proves that. But when we also look at the very system that was created to solve problems, when systems and organizations become too complex and big, the centralized authority creates unique challenges, which in the long run only benefits a few. So when you look at blockchain, what blockchain is, it's about taking away centralized power and unifying the playing field. And that's where the disruption is taking place. And one of the major areas you're going to see disruptions taking place is in the world of finance. Because money is a social construct, money is a language, it's a form of communication that we use to represent value. And now in the whole digital age, we realize that a lot of changes are in fact happening. When you really look at Bitcoin since 2008, the organization under the pseudonym of Satoshi Nakamoto that created a disruptive currency peer-to-peer digital system that has in fact changed the modus operandi. So I'm going to read from this book, The Internet of Money by Andre N. Antonopoulos. And Antonopoulos, one of the leading experts in Bitcoin, has created some very interesting ideas and perspectives that I want to share with you right now. And on page 30, he talks about currencies evolve. In the new network-centric world, currencies occupy evolutionary niches. They evolve like species based on the stimulus they have from their environment. Bitcoin is a dynamic system with software developers that can change it. The question is, in which direction will Bitcoin evolve? Which environmental niche will it attempt to fit in? And how will that be affected by the actions of the powerful? If they attack Bitcoin, it evolves to defend itself against predators. Just like any species, if they attack Bitcoin anonymity, it evolves to become more anonymous. If they attack its resilience, it evolves to become more decentralized. In the end, despite all of the messages of fear, Bitcoin is the cuddly little bear of currencies, and you do not want to kick it. Because, as in evolution, if you stomp on the little gecko, it will evolve until it's Komodo dragon, and then you can't stop or stomp on it. Sometimes people ask me, do you think governments will ban Bitcoin? Do you think they will try to regulate it out of existence? Do you think they will attack it with denial of service attacks? The answer is really simple, because in network-centric systems, systems that are dynamic and adaptable, systems that exhibit anti-fragility, attacks cause the system to adapt and evolve and become resistant. Think about that, or think about that concept for a second. And therein lies the key to evolution. Evolution is going to be based on attacks, on anti-fragility attacks that's going to cause many cryptocurrencies to adapt and evolve. And the most resilient cryptocurrencies or protocol tokens or many of those DeFi apps are in fact going to succeed based on this exact principle. Therein lies a fundamental idea that we really want to encapsulate. And what we want to encapsulate is that anything that represents true meaning, purpose, and value is going to be attacked. But it is not being attacked is the bad thing. Being attacked causes systems to become more resilient. In this case, Bitcoin has become more resilient since 2008. We have seen that in terms of its value, in terms of its base, in terms of its market cap. So we must be cognizant that many of the thousands and thousands of cryptocurrencies that exist in the market have in fact gone through many, and many will not exist in the future, and many new ones will come. And that is the purpose of being resilient. When we look at where we are since the last decade, the fourth industrial revolution, the fourth industrial revolution is ushering the process for change at a quicker and more dynamic rate. In other words, it is causing society to evolve. And since the first industrial revolution, which was based on mechanization, water, power, steam, etc., we have moved from that to mass production assembly lines back in the early 40s and 50s, to now computer animations. And we have even moved beyond that to cyber physical systems, where we have cloud computing technology, the Internet of Things, and we are now creating smarter, intelligent robotic systems that now work collectively in order to create now a whole distribution network of production and services. And that's where we are at this point in time. And technology, the Web 3.0, is changing and advocating that at an unprecedented rate. And we are also being part of that, because of the technology changes that's happening in the fourth industrial revolution is in fact changing the dynamics of how we evolve as a society, as a species, how we interact with real value. And the purpose of our discussion today is to discuss value as it represents digitization, the blockchain system, and what are the pros and cons in terms of identifying the weaknesses or even the strengths in the system. And that's what we are collectively going to be discussing. And we have, in fact, initiated that discussion already in today, in this means of modus operandi, in terms of breaking down the system to understand its whole dynamics. So reinventing the financial system is not really difficult because we are dealing with the basic precepts. And in that basic precept, we will be discussing that whole process of evolution. Now, Jeff Bezos said it right. What's dangerous is not to evolve. And that is the problem that many persons are, in fact, facing. And since we are in a global pandemic, we are seeing negatives as well as positives effects of what disasters can do. As Sun Tzu rightfully said, that in chaos there's always opportunity, but there's only opportunity in chaos if you can see the bigger picture, if you can understand where the technology is going, if you can understand the dynamism of why we are doing something in particular. Why are we using Bitcoin? Why we are using cryptocurrency? What is the dynamism? What is the modus operandi for using that kind of technology, that digital payment system? We need to understand the why more than the how. Too many times we are too focused on the left part of our brain. And the left part of our brain is saying, how, what is what, when, but not about why, seeing the bigger picture. And that's why it's important for us to understand that in all human societies and cultures, the ones that evolve and adapt the quickest are going to be the societies that are going to evolve and change the whole landscape in terms of the culture, in terms of its people. And that's where we are. We are at this dichotomy in our human existence where we are faced between old systems and standards, which have worked to some extent, but we're holding on to that at the cusp of new technology, which is more adaptive, which is even creating greater freedoms for the average citizens of the world. We have over 2.2 billion people that are unbanked, that don't have bank accounts, that will never have bank accounts, that live on less than $2 a day, whereby more than 2 to 3 billion people on the planet have access to goods and services and bank accounts and credit cards. So when we look at the past dichotomy of the financial system, we've recognized that while the financial system has in fact created billionaires, multimillionaires, has in fact created wealth for the last 5, 6 decades, it has also, the other side of this dichotomy, created a lot of misfortune, a lot of deprivation, a lot of disease. People of many of the other countries that are not so-called first or second world are now outside of that system. And the whole idea of blockchain is now to bridge that gap, is to now give people an equal footing, to give people that opportunity. And this is the dichotomy that we are facing right now. And that's why it's important for you to see the bigger picture. When you see the bigger picture, meaning you see the world as it is right now, you begin to see how deep the rabbit hole goes. You understand the dynamism or the ideas and concepts of what money really is. And you recognize that there is a dysfunctional role as it relates to money and how it works. And you're looking at the other end of the scale, the other part of the dichotomy as it relates to innovation, as it relates to a technology that's now leveling the playing field, that's giving people from all races, colors, creeds, and classes the opportunity now, once they understand the dynamism. And that's where structured and strategic education comes in, which is what you are doing right now, to see the bigger picture. So the whole purpose of us having this discussion now, as you listen to my voice, is to understand that concept, is to understand the bigger picture as it relates to where the world is and where it's going and how you can fit into that dynamism. And that's the dichotomy that we're basically facing. So we have this scenario And let's look at the scenario very carefully because it's a normal scenario that exists in normal everyday life for people who have credit cards and debit cards. But let's look at the credit card system. And we're looking at the credit card system because it is a means of payment that most people use in developed countries, developing countries as well. So we go to Starbucks. We have a situation where, let's say Carol goes to Starbucks and wants to buy a coffee for $25 TT. She pulls out her credit card. The credit card now transaction goes through in about 60 seconds. She gets a receipt. The coffee is given to Carol. But what happens behind the scene is that that transaction has to go through roughly about 3 to 5 different intermediaries, depending on the card that she is using. And it takes Starbucks roughly 3 working days before they can be credited in their account for the purchase of that $25 coffee. And in the process of doing so, by going through at least 5 intermediaries, what's going to happen, the merchant also has to pay for the fees that are generated. So what is happening right now in the financial world is banks are the gatekeepers, no doubt about that, but they also have the ability to charge exorbitant fees. And because they're doing that, they limit the kinds of opportunities that merchants can benefit from. So you find if you go in many places in the States, many persons no longer use credit card machines. They prefer cash to avoid all these charges. In Trinidad and Tobago, many businesses cannot get terminals simply because the charges that's going to be placed, 3-4% of the cost of the item sometimes, is what's going to be charged on the card that the merchant has to pay for. And you have to factor that in terms of becoming more competitive with maybe your competitors. So you can't mark up your products and services to the extent for the 4% fees. So you see the dichotomy now that is existing in the financial world, in the merchants and consumers alike. So credit cards are basically a two-edged sword, and you really have to use it in a way that is going to benefit you, and it requires a level of discipline to avoid those problems. And that's one of the major problems that we are experiencing with banks, with money becoming the major gatekeepers, because banks are in fact the gatekeepers. And since they are in fact the gatekeepers, they are the ones who are actually calling the shots, and there's nothing we can do about it. But with a decentralized system that's now coming in play because of blockchain technology, it's now changing that whole modus operandi. It's changing the dynamism of how people have choices. So when you look at the banks, you realize that they're well positioned all over the world. And they have been around for a very long time. And because banks have been around for a very long time, they now control the financial system. So that's where the disruption is taking place. It's already taking place to the extent that Andrea Anatopoulos is saying that the existing banking systems extract enormous value from society, and it is parasitic in nature. Very true indeed. That the banks have now the very essence of what banks started from the fiduciaries, from the kings and queens and nobility, to help the average everyday person, which they have in fact started to do, and they have done successfully for many, many decades. They now have become so large that they've lost their inner content and drive, the whole perspective of what they really were created for, and now become parasitic in organizations. And that is what happens in a centralized system. And when we look at all centralized systems in banking and politics and the works, we recognize that once there are centralized authorities and systems, there's always room for corruption. And that's why blockchain systems are changing the landscape, because it's taking away that power flux that has affected organizations and systems for decades. And we are at the cusp, we are at the helm of that innovation. Blockchain revolution is changing the status quo. It's changing the way in which we represent value. And that's very important. We need to understand that blockchain is now the technology that is the driving technology, or the driving technological system that's creating a different kind of innovation, a different kind of drive, because now for the very first time, I can send payments to you and me which is called peer-to-peer, as opposed to going through 5 intermediaries like the incident with Carol at Starbucks. Carol now can use now Bitcoin or some form of micro or some form of payment, because there are many cards that actually use cryptocurrency / US dollars that are now changing the way in which that whole thing is represented. But it's going to take some time, because innovation does not happen overnight. Innovation takes time, but innovation is driven by mass adoption. It's driven by the people. For the look of smartphones, if you looked at smartphones over the last decade, the explosion of smartphones has quadrupled, even in the Caribbean and Latin American region. Almost everyone, more than 95% of persons that live in our societies have smartphones that use WhatsApp, Facebook, and many of the social media platforms. They are connected, they have data plans. So many of them are in fact connected. So the real mass adoption has to take place along those lines, whereby the usability of the services, whereby the ability of the average everyday person to be able to interface with that technology. So we are still at that juncture where the average person is still trying to understand what is a private key, what is a public key, what is a wallet, cryptocurrency, how to interface with that. But we are getting there. And that's why Blockchain Revolution, we are very fortunate indeed to be at that place. So let's look at 4 areas of disruption that are actually taking place simultaneously over the last decade or so. And in fact, it's now accelerating even more. And the 4 areas of disruption are: number 1, attestation. And attestation has a lot to do with trust, cost of transactions, speed of transactions, and of course, risk management. So when we look at attestation or trust, for the very first time in history, we have 2 parties who does not have to know each other that can transact business. They don't have to trust each other. So for the very first time, because of blockchain technology, the protocols of blockchain that validates trust between 2 parties who don't even know each other, who may never want to know each other, who may never trust each other, but can still create an environment of trust. So this whole establishing trust is no longer the right, it's no longer the privilege of any financial intermediary like a bank or financial services sector. And so that whole context of the financial services, that trust protocol takes on a double meaning. So blockchain can establish trust when trust is needed by verifying the identity and capacity of any counterparty through a combination of past transaction histories. And of course, when you study blockchain, you recognize that we're dealing with a digital ledger, and that ledger cannot be changed for no reason at all. So we are looking at the establishment of trust without the need or validation, rather, for financial intermediaries. And that is really where the rubber meets the road. That's really where the disruption is beginning to take place. Because for the very first time, we are seeing that this trust protocol is going to cause banks and intermediaries to shut down their services that use a lot of people at their back ends. And that's where the disruption is taking place. It's already happening right now. Another important area is the cost of transactions. As you recognize with the example of Carol buying the $25 coffee at Starbucks, the 5 intermediaries, or 3 to 5 based on maybe the credit card that she's using, there are going to be fees that are going to be incurred. So naturally, the cost of the transactions has to change because we're dealing with multiple parties. When you're dealing with blockchain systems, you're dealing with a peer-to-peer. You're not dealing with 5 intermediaries. So now you're changing and cutting out the middlemen. And that is considerably important. And when we look at now that whole vast array of fees that's being charged, you begin to recognize that using peer-to-peer transactions through blockchain systems are now going to change that whole status quo. In fact, they're saying that if banks would harness that capability, they would save $20 billion in back office fees. But of course, we know that banks aren't going to change that modus operandi because it benefits them and there aren't any main incentives for them to do otherwise. Then we have the speed of transactions. Now, the speed of transactions has a lot to do with remittances in terms of sending out money. Western Union in the Caribbean sent out, they said they generated roughly 5.2 billion in 2020. And we all understand why, because of the unbanked. 200 countries they service, about 100 countries where they have full liquidity. And we begin to understand that that's a huge market for them because 2.2 billion people on the planet simply do not have bank accounts. So today's remittances take roughly, get this, 3 to 7 days to settle. Imagine in a technologically advanced world, we still have to wait on banks to settle remittances between 3 to 7 days. It takes roughly about 2 to 3 days if you're buying stocks and bonds on the stock market. And get this, SWIFT, which was the International Payment Network System, handles 15 million payment orders a day between 10,000 financial institutions globally, but it takes roughly a week in many cases to clear. And the same is true for the automated clearing houses, the ACH, which handles trillions of US dollars per year. The Bitcoin network, the Bitcoin network takes 10 minutes to close a transaction. 10 minutes to clear and settle all transaction conducted during that period. So you begin to understand that cutting out the intermediaries, the banks, and having peer-to-peer transactions dealing with money and settlements and so on, how much millions and billions of dollars in fees can be saved, are being saved at the same time too as well, because many persons are in fact using these systems. And that's really important. So when we look at the speed of how transactions are being conducted today versus blockchain-based systems and the speeds by which are being developed even in the DeFi space right now, you begin to see that there is a whole new world of excitement that benefits the people, not just a privileged few. Then we have risk management. So blockchain technology promises to mitigate what we will call financial risk. The financial risk we are talking about is really counterparty risk. In other words, let's say I lend someone $100. I lend John $100. And for lending John $100 for 12 months, John is going to have to pay me $120. But if I do not have a system or a support to say that John is going to pay me that $120, then now we are developing counterparty risk. So counterparty risk is what we will call default risk. Its most significant is systemic risk, really. It's really systemic risk. And what systemic risk is, it really is the sum total of all outstanding counterparty risk, meaning other parties that have liabilities that may have borrowed and need settlement. So risk management within the context of blockchain systems are in fact changing counterparty risk. So we can limit counterparty risk because we are dealing in real-time settlements. We are not dealing with fraudulent intermediaries. We are dealing with real-time settlements. And that is one of the major disruptions that are going to be taking place. And it also is going to change the whole systemic risk of the financial services sector. Because back in 2008, when the market crashed, it was based on counterparty risk, the mismanagement of counterparty risk. So when you have counterparty risk being mitigated on blockchain systems, we are now minimizing counterparty risk to such an extent whereby we are no longer going to incur that level of risk. So you begin to see within the context of what we are discussing, the reinventing of the financial services sector, how blockchain systems are in fact changing the status quo of the current and becoming obsoleted systems, and how that's changing the status quo. It's very interesting, it's very exciting. We are talking just basic, so I'm just barely covering the basic, but the whole concept of us having this discussion is for you to see the bigger picture. So when you see the bigger picture, you begin to understand the why versus the how. So this blockchain, as we have talked about, is that whole system of trust which we just spoke about. Now we've found through blockchain that we do not need to validate trust in order to complete transactions anymore. That is the major disruption that's taking place. We also discussed cost of transactions, that if I can minimize intermediaries between one party and the other, like Carol and Starbucks, I now can save significant amount of transaction fees. And that is in fact happening in the blockchain space. We also talked about the speed of transactions. And this is a particular example of a Komodo platform that says that it outperforms Visa in terms of its number of transactions. Visa does 24,000 transactions per second, and Visa is a 60-year-old company. The Komodo system, all right, and this is a cryptocurrency DeFi system, processes transactions up to 45,000, believe it or not, per second. So Komodo definitely is outperforming even some of the major cryptocurrency players right now as it relates to how it's responding to handling transactions. So for a very long time, Visa payment system remained an unsurpassed leader in the speed of transactions. We all know this. Until now, when one cryptocurrency outperformed it is a major indicator. The Komodo, the anonymous fork for Zcash, is now holding the title King of the Speed. The platform test showed as a result of 45,000 operations per second. Second place among crypto with a huge gap was XRP, whose network allows 1,500 transactions per second. And get this, Ethereum and Bitcoin hold the last place with 30 to 10 operations per second. Traders often face transaction delays, not a surprise as the growing popularity of these two currencies exceed the ability of the network in terms of processing. So you're going to find more and more DeFi projects that are in fact changing transaction speeds. And this is a perfect example of where blockchain systems are already changing the speed of transactions. And of course, we talked about risk management, limiting counterparty risk, and counterparty risk synonymous to systemic risk, which was prevalent in the 2008 financial crisis. We are beginning to see that there are notable positives that are coming as a result of this. And when you look at the application now, as a side note, in terms of Bitcoin, you might be wondering, well, who actually accepts Bitcoin? We have jewelry and watches, Cryptomatic, ESTY, I've done shopping with them, Dish Network. We have Subway. We have bank and payment services like PayPal. Most people have known that. And the advent of PayPal accepting Bitcoin has changed the trajectory of the value of Bitcoin since 2020. Then we have online shops like overstock.com that are already Shopify, that already taking Bitcoin. We also have travel. We have charity, the movie industry, clothing, software and hardware manufacturers like Microsoft and LibreOffice, all accepting Bitcoin. We have the gaming like Xbox, just to name a few. PlayAsia, Beta Coin, all of those accepting Bitcoin, hosting cloud services like ExpressVPN and NordVPN, very popular VPN. This is to let you know that the amount of large companies and corporations that are accepting Bitcoin are not few and far between. So the distinction, the disruption that we are talking about is already taking place. And another case in point, when we talk about practical applications for blockchain, we of course established the financial industry, which is what we are talking about. Smart contracts is another area, digital IDs, and of course, blockchain Internet of Things. So when we look at an example, we are going to now look at a case in point that's already in existence right now since 2016, and that's Dubai. Dubai is a very important port of call. in that part of the world. And the Dubai government has announced since in 2016 its strategy. And get this, they said that blockchain enabled governments will allow an infrastructure for business communications and government technology, promoting greater auditability and security. They're also saying that they're becoming a paperless government using blockchain, using the power of cryptography, and allow for a private key encryption of documents. Very interesting, since 2016. A policy framework to guide the definition of policies and procedures with respect to the adoption of blockchain, functional uses for services that also add value to the government, value to citizen, resident experience in 8 strategic sectors. Very interesting. And when you look at Gulf news, Mohammed bin Rashid launches the Emirates blockchain strategy in 2021. 50% of government transactions will adopt the blockchain platform over the next 3 years. This has already happened. We are in 2021. So this is saying to you that we have serious-minded countries that are adopted. They have adopted the blockchain. They are not experimenting on it. They've already adopted the blockchain system. And if we look at the many issues that they say that blockchain is going to solve, it's going to solve proof of identity. It's going to bridge the gap digitally in terms of identifying goods, people, company when dealing with cross borders, because as you know that Dubai is a huge transshipment port of call. Asset transfer, which is very important, that people have been discussing in the financial services sector. They're saying that the blockchain embedded with business rules will automate and secure correct transfer of goods, money, and entitlements between stakeholders. And that's very, very important, because if we're dealing with e-commerce, we're dealing with business and supporting services, well, then, of course, having a proper asset transfer and tracking system becomes paramount importance. Then we deal with the Pathfinder, how to track and trace and monitor every transaction, every movement of goods and services and containers in the supply chain. Very critical if you want to grow a huge port of call and by extension improve the infrastructure of any society. Then of course we're dealing with border collaboration, where we have government collaboration by integrating a process where they can secure and share relevant data orchestrated by a blockchain. So we already can see that Dubai has well positioned itself in the blockchain space. And in case you're not familiar with where Dubai is, you recognize that it's in the Middle East. It's a trade, they're using now trade-friendly policies and infrastructures and even geographical locations that has made Dubai a hub in terms of its global trade. The trade sector is one of the most strategic to the government, with around 30% of its contribution to GDP. The Jebel Ali port is the world's ninth largest container port in the world. So you're beginning to understand why the use of using blockchain systems supporting services and logistics and management play a critical role. Home to more than 30 huge free trade zones and one of the world's busiest international airports. Dubai's external non-oil trade has reached over 353 billion in 2018. Of course, in 2019 and 20, we don't have the figures. It would have surpassed that despite of the pandemic. So despite a number of challenges that the world trade has been through, Dubai's trade has grown by 72% from the period 2009 to 2018, just within that decade. So it begs to reason the use of blockchain services and systems is in fact changing the status quo as it relates to where the world and as well as an economy can in fact perform. So there are ample justification for the use of blockchain systems, and that is of paramount importance. So you begin to see the whole space, the whole disruption in the fourth industrial revolution, the whole aspect of peer-to-peer transaction, the whole aspect of validation of trust using blockchain systems, that it's changing the way in which one collect data, where one manages data, where one actually reconciles currencies, transactions in real time. So it's changing the dynamics and is continuing to do so. And there are many coming changes as it relates to identity and value. How do we move value? How do we store value? Lending value. All of this is a case in point that even Saudi Arabian government, Dubai actually is in fact doing as well. Funding and investment, ensuring value and managing risk, counterparty risk, and accountability in terms of accounting for value. All of these things are now becoming changes that are now being integrated in permissionless blockchains, private blockchains. May not all fully be decentralized, but combination of decentralized and centralized for the purpose of logistics and management. So as we come to the end of this very important discussion in reinventing the financial services sector, you begin to understand and seeing the bigger picture as it relates to the global perspective of blockchain. That blockchain is not just another concept. Blockchain is not another idea, but blockchain is a practical representation of value, trust, risk management, and many, many more. And to end, Andrea Anatopoulos quite rightfully, Bitcoin is not a currency, it's the internet of money. And that changes the perspective. I want you to bear that in mind. It's not just about buying and selling that many people do on a day-to-day basis as it relates to cryptocurrency. And well, that is in fact does have some merit. But I want you to think beyond that, that Bitcoin is not just a currency. It is the internet of money. And because it's the internet of money, it opens a whole new megalithic world of opportunity.